Hey everybody, so today I wanted to talk about gaps and volume. So these are two very important concepts that I believe you should pay a lot of attention to. So my first example is going to be a firm. Now notice here, so I'm going on the 1 year and then I'm zooming out. So this is what a gap looks like. Right here, do you see that? There's no bars, no nothing. And then you see another gap right here. So essentially what a firm did was it gapped up twice and it never went back to fill these gaps. So right there, that was my first area of concern. Now I remember at the time when everybody was hyping up a firm, I wasn't buying it. I was very scared of it because I saw these gaps right here. And generally when I see gaps that aren't unfilled, that usually means that they're going to get filled at a future time. It doesn't always have to happen, but the probability that it does happen is usually very high. So we have two gaps unfilled. We just continue to go up. And then when we sell off, we have these sharp sell offs. But look right here, we have this gap fill that happened right there. So that's around $91. And then you can see that we have sideways price action. And then it goes down to fill the next gap here at $72. So this is the gap getting filled. And then now we don't really have any more gaps in the chart. So now it's just selling off without any gaps getting filled. Now, this is the volume portion of it. Now notice when we look at the volume here, this red volume trumps all of the previous green volume. So when I saw this red volume right here, now I'm going to zoom in. It's right there on the earnings. I knew that more selling was going to take place. So when we opened that day, it was around like 50, like 40 something. So when I saw these two large selling volumes, I knew that more selling was in store. And then now we're around 3080. So things don't look too good, but you can see that volume is declining here. You can see that the volume profile isn't as large as it was before. So it's safe to say that a lot of the strong selling volume has come out of the stock because it mostly happened on these 2 days. And then just another example, I think gold is a perfect example. So notice here, so this was the previous top, 194.45. Now, right around here in the most recent price action, we came really close to that, 193.30. But there's two very different things going on here. So right here, when we went to 194.45, there was very strong selling volume. Do you guys see that? That massive selling volume right here. But now look over here. We have like a mixed bag here. We have strong buying volume, and then we have some selling volume coming in as well. But there's one thing I want to really zoom in on right here. So you can see once we hit this 194.45 area, we had this strong selling volume that came in. And then we sold off right here. We left a gap right there. Now notice that this gap later went to get filled. Now we had a gap up. Now when I see something like this is going to be a very good shorting opportunity. When you see selling on high volume with a gap down, and then you see a gap up, this is going to be your shorting entry, the gap up. And then you just ride this all the way down. And then notice that we left another gap here. This got filled right here. So you see this gap? It got filled right here. And then we made another gap right around here. And then notice that this gap didn't get filled until we went all the way back up here. So right here we filled that gap. And then there's plenty of gaps in this chart. So what I'm looking for on gold is I want to see some serious selling volume here. So right around here, if we break this 183 area, or this 182.39 area, let's say we break it and we see some serious selling volume coming in. Then what I want to see happen is a rebound back. So let's say all of a sudden one day, let's just say the Russian news is getting a lot better and the war is looking like it's coming to an end. Now let's just say one day we just all of a sudden gap down in the pre-market and then we open around like let's say like 178. Then what I would want to look for is that gap back up, and then that's where I'll get my short position. If I see strong selling volume followed by a gap up to fill the previous gap. So that is just a perfect scenario to short, and it'll look a lot like this over here. So sell off and then a gap back up with a high selling volume. So that right there is going to be the perfect opportunity to be shorting gold. So that's how you would use the gaps followed by volume. Now, if you look at Google, you can see that Google had this massive gap right here. So I think eventually one day that this could get filled. So maybe it might be a good idea to start buying Google on the low and then look for a gap fill. But also pay attention here that we had strong selling volume on the earnings. So that's how I knew that we were going to sell off further on Google when I saw that strong selling volume coming in. And then if you look at this top to where we are now, that's about a $400 move. I mean, I was warning people not to be buying Google around these areas and to let it come back down just because of that strong selling volume that I was seeing. So strong selling volume means most likely future selling. Now here's another interesting scenario. So this is Moss Mosaic. It's a one of those fertilizing companies that everybody is into because of potash. So when I go on the 1 year, things look very bullish. I mean, you see all this green volume, green volume, green volume, green volume, green volume. Now let me just flip on to the 1 day. So intraday, you know, I was just looking at Moss, and full disclosure, I did have shorts on Moss when I saw this right here. So look at this volume profile. Everything is going fine. Everything's fine and dandy, you know. Small volume. Out of nowhere, this massive, massive selling volume. I mean, this is in the middle of the day. So you can already tell here, oh, okay, the selling volume is short. It's not very great. And then all of a sudden you get this one massive red candle of volume, and then everything just goes right back down to normal. So to me, this is somebody with a lot of money who was selling a lot of shares. And yeah, that's how I interpret that. And then look here later. I mean, we are just holding this price action for a while. Things just got steady. And then we sold off like crazy. I mean, this right here was like a 3% move. So right when I saw that, I was starting to pick up shorts on Moss. Now, seeing something like this, you're not going to see this all the time. I mean, I consider this a pretty rare instance where you just see one massive red candle in the middle of a rather silent day. So that was my hint. Hey, I need to pick up some shorts here, and then maybe they might pay off. I mean, of course, this is like a gamble. You know, it's not a sure thing. But to me, this was just like a hint. Like, hey, things might get a little sour here, so maybe it's worth getting a short. So that's just some information about volume and gaps, and I hope it helps you in your future purchases.